You have $10,000. You can't leave it in cash. Inflation will eat it alive. You can't go all in on stocks, too risky. So, buying gold or Bitcoin, one has 5,000 years of history, the other made millionaires overnight. But here's the truth they don't tell you. Pick wrong, you lose years. Pick right, you gain freedom. Let's settle this. Now, gold versus Bitcoin. The dinosaur versus the comet. Old money versus new code. Gold bugs say Bitcoin is tulips, a bubble that will pop. Bitcoin maxis say gold is a rock, heavy, useless, and ancient. Who's right? Neither. And both. Today, no hype, no fear, just math, history, and strategy. By the end, you'll know exactly where to put your cash. And more importantly, why? Because most people do not lose money from bad assets. They lose money from bad decisions. First, gold. Why does it still matter? 3 reasons. Reason 1, 5,000 years of trust. Gold has never hit zero. Empires fell, currencies died, gold survived, Rome collapsed. Kings were overthrown. Paper money failed again and again. Wars came. Borders changed. Banks disappeared. Yet across centuries, people still reached for gold when fear arrived. That matters because trust is the most valuable asset on Earth, and gold has more trust than almost anything humans created. Reason 2, central banks are buying. China, Russia, India, they're stacking gold like crazy, not Bitcoin, gold. Why? Because nations do not gamble with reserves. They buy what they trust in a crisis. When serious institutions get nervous, they often move toward gold. That should tell you something. Reason 3, no counterparty risk, no internet needed, no electricity, no password reset, just real physical wealth. No CEO can dilute it overnight. No exchange can freeze withdrawals, no app can lock your account. But here's the catch. Gold pays nothing, no dividends, no yield. You buy it, you store it, you wait, and waiting can feel boring. Years can pass with little movement. That boredom is why many people quit too early. Who buys gold? People over 45, low risk tolerance, or anyone who wants crisis insurance. Gold won't make you rich, but it will keep you from going broke. Sometimes that is more important. Now, Bitcoin, the asset that makes gold look like a horse and buggy. Reason 1, mathematical scarcity. Only 21 million Bitcoin ever, no printing, no inflation by decree. Gold, they mine 3,000 tons every year. Bitcoin's supply halves every 4 years. That's harder than gold. Scarcity creates value, if demand remains. And so far, demand keeps returning. Reason 2, portability. Try moving 10 million in gold across a border. Truck, security, luck, Bitcoin. Memorize 12 words. Cross any border with nothing but your memory. Revolutionary. In unstable countries. That matters more than most people realize. In unstable countries, that matters more than most people realize. Reason 3, performance. 10 years ago, $1,000 in Bitcoin is now over 100,000. Unfreaking believable. Gold, $1,800. Nice, but not life-changing. Bitcoin changed lives. Some became rich, some retired early, some escaped inflation-heavy countries. Reason 4, adoption keeps growing. Big funds entered. Public companies bought it. Governments now discuss regulation instead of banning it. That matters, because what was once fringe is slowly entering the mainstream. Banks laughed first, then they copied it, then they offered it. That pattern happens often with disruptive technology. The downside. Brutal volatility, 80% drops. In 2022, 69,000 down to 16,000. Could you hold it? Most people can't. They love Bitcoin in bull markets and hate it in crashes. They buy greed. They sell fear. That cycle destroys beginners. Who buys Bitcoin? People under 40. High risk tolerance, long time horizon, and nerves of steel. Let's compare volatility. Gold wins, whereas Bitcoin is a roller coaster. Some days it rises fast. Some days it drops while you sleep. 10-year upside, Bitcoin wins. Gold might double or triple. Bitcoin could go 10 times or zero. Crisis safety, gold wins. Banks fail. People want gold, not crypto exchanges. Internet outage. Gold still exists in your hand. Portability, Bitcoin wins. Not even close. Track record, gold wins. 5,000 years versus 15. Transparency, Bitcoin wins. You can verify supply on-chain. Gold supply estimates are less precise. Privacy, gold wins. A coin in your hand leaves no digital trail. Liquidity, both are strong. Gold dealers exist worldwide. Bitcoin trades 24/7. So, who wins? Neither. Because you don't have to choose. That is where most debates fail. They assume investing is war. It is not war, it is construction. Here's the secret maximalists won't tell you. Gold and Bitcoin do different jobs. Gold is crisis insurance. Bank runs, currency collapse, chaos, slow, boring, reliable. Bitcoin is asymmetric upside, a small bet on a digital future. If it works, you win big. If it doesn't, you lose a small bet. That is an intelligent risk. Limited downside, meaningful upside. The smart money does this. 5 to 10% in gold, 5 to 10% in Bitcoin. Not 100% in either, not zero. Here's a sample portfolio for $50,000. 60% low-cost index funds, 20% bonds or cash, 10% physical gold, 10% Bitcoin on a hardware wallet, growth, income, and 2 kinds of insurance. You do not need to be extreme. Extreme opinions are loud online. Balanced portfolios build quiet wealth, and quiet wealth usually lasts longer. Most people lose money because they trade. Buy Bitcoin at 60,000, panic sells at 30,000. Swear it's a scam. Buy gold at 2,000. Get bored. Sell at a loss. Then watch it rise later. Here's the rule. If you buy gold, hold for 5 years minimum. If you buy Bitcoin, hold for 10 years minimum. No checking prices every hour. No selling because some YouTuber screamed crash. No buying because someone promised moon prices. No revenge trading. No emotional decisions. You are not a trader. You are an allocator. Gold and Bitcoin are not get-rich-quick schemes. They are long-term hedges. Treat them that way. Consistency beats excitement. Discipline beats prediction. Patience beats panic. So, gold or Bitcoin? If you're over 50, risk-averse, buying a house soon, buy gold. If you're under 40, high-risk tolerance, steel nerves. Buy Bitcoin. If you're under 40, high-risk tolerance, steel nerves. Buy Bitcoin. If you're in the middle, blend both based on your goals. Need stability, lean gold. Need growth, lean Bitcoin. Need sleep at night, lower Bitcoin exposure. Need upside potential, increase it carefully. But for 90% of you watching, buy both. 10% gold, 10% Bitcoin. Hold for a decade. Rebalance once a year. Ignore the noise. Ignore headlines. Ignore tribalism. Ignore panic. Here's the real secret. Wealthy people don't pick winners. They build portfolios that survive anything. Gold survives collapse. Bitcoin survives inflation. Stocks survive growth cycles. Cash survives emergencies. Together, almost unbreakable. I want to hear from you. Team Gold, Team Bitcoin, or both? Comment below. If you want part 2, how to buy physical gold without getting scammed, and how to set up a Bitcoin hardware wallet, smash that like button and subscribe. Until next time, protect your wealth. Think in decades, not days. Ignore the circus. Build the machine. This is Freakish money.